Hello, my name is Ron Kachowski. I'm a licensed investment advisor and owner of a boutique financial advisory business by name Advantage Advisory, based in Melbourne. This is our monthly economic update and investment themes, and it's November 2010. Well, the GFC is now 3 years on, and we'll look at the impact of that and what's happening in America called QE2, quantitative easing, and what assets will rise and fall because of this. But remember, as investors, we need to be a little bit cautious, because central banks around the world are printing mountains of money, and there are always unintended consequences of that. So the GFC was nothing more than a banking failure. Unfortunately, it was the greatest bank robbery in history, but this time it was the bankers doing the robbing. So this banking failure now has caused banks around the world to bail out their rich mates on Wall Street and in London. Unfortunately, it's the taxpayers that are paying for their sins. A little bit like here, the Aussie banks needed to be guaranteed by the government so they didn't end up in any financial trouble. But unfortunately, the banks here have become addicted to making money, and they've become greedy fee-grabbing machines. This year in Australia, they made over $21 billion by gouging profits out of their customers. And the government's talking about more competition. Well, maybe they should have thought about it before and stopped the banks from buying anyone who was competitive to the banks. RAMS, Aussie Home Loans, St George, Bankwest and many more. They were bought by the blessing of the government, and now they're worried about a lack of competition. So if you're a mortgage holder, what can you do in the short term? Well, go back to your bank. Ask that they reduce your interest rate or cut your fees. Or if you're really savvy, go to a mortgage broker and let them shop around for a better deal and threaten to take your business elsewhere. So the best way to get back at the banks is to vote with your feet and to threaten to leave. And also tell your politicians that you're not happy about the bank monopoly. Because these are the same people who stopped lending for business and for commercial property, and they focus just on home loans, and guess what? They pumped cheap, easy money into the system. Last couple of years, houses went up by 30% plus, and you can see why. Because cheap, easy money does inflate assets. QE2 in America is designed to get businesses to lend, but the banks are not lending, so all the money's finding a home in the stock market, and it's driving up speculative investment and driving up assets around the world. So whilst they're printing this money, you as an investor need to be making money by following the following themes. The first thing I want to talk about is the commodity super cycle. There are 3 phases to an economy advancing. First is they move to the cities and you need to produce more energy. That's why oil and gas prices and electricity prices are rising. You need to have metals to build their infrastructure. That's why copper, iron ore and coal are doing well, and BHP and Rio. And once you've developed those countries, like now in China, the next boom to follow that's just about to start is the boom in agriculture and in food. So between the Middle East, Brazil, Russia, India, China, they need $6 trillion of infrastructure, including roads, rail and port, and that's why Australia is booming on the back of that demand for the commodities. And that's why we believe that soon gold will rise to 2,500, silver will quickly zoom up to $50 an ounce, and we'll see oil at over $100 a barrel by the new year. Now this QE2 has a huge amount of risks. Both the Chinese government have said that America's being irresponsible, and the Germans recently said that America's US policy is clueless. So there are risks with this QE2. It'll drive up assets and create bubbles, and those bubbles eventually will burst. So it's time to be heavily invested, and if anything falls back in price like gold or silver, load up with more. And as I said, assets do inflate. Look at Australia, we've had 14 years of price rises, and all of a sudden now housing is very unaffordable. Might be great for you if you own a home, but think about your kids. How will they ever be able to buy a house? So rising house prices aren't good for our country, and they're certainly not good for our future generations. And you also need to be aware that mortgage rates could easily be 9% within 12 months. Now, 10 years ago, wages were much less and houses were cheap. Since 1999 to 2009, the average wage has risen 62%, yet house prices have tripled. They've gone up 300%. Now, clearly this is not sustainable. Go to any auction, go to open inspection, prices are ridiculous. Average suburbs, they're asking $1 million for a home in Melbourne. This is nuts, and this can't continue. But recently, clearance rates are falling. Even on the weekend papers, they've said that this is the lowest for 2 years. We're seeing a slump in auctions. Also be aware that house prices in UK and USA are likely to fall and have the second leg down. That means more problems for banks, more bad loans, and more pressure for governments. And again, I've mentioned Ireland. They could be facing bankruptcy within the next 6 months. So we have to be a little bit careful about the risks and the consequences of QE2. So that's the background to where we're at today. Don't listen to economists, don't listen to the media. They're cheerleaders for the banks and for fund managers. They again missed the GFC. They're telling us there's no housing bubble, but we believe that they're far from correct, and they'll be wrong again when it comes to the consequences of QE2. So as an investor, what do you need to do immediately? It's to reallocate your portfolio. Contact Vantage Advisory, make a time to come in and we'll show you what needs to be done. There's massive opportunities to make money in the next 3, 6, 9 or 12 months ahead. Where will it be? It'll be made in the following areas. It'll be made in the stock market, in the resource sector, in mining, in energy stocks. It'll be made in buying into agricultural assets and into food and soft commodities. So it's a great time to be looking at investing into farmland, into Melbourne CBD property, who are both at the low in their cycle. Again, I've had a theme year after year, if you've listened to me in seminars, try to avoid what's hot, try to invest what's at the bottom and what's out of fashion. And clearly farms, food are out of fashion at the moment. The other area you need to put a big portion of your investments, big portion of your super, big portion of your other investments is Asia. Because China, India, Asia is booming, and at least 30% of your wealth should be invested in these areas. There are screaming bargains in the stock market in Asia, and most investors overlook this area. And also right now, it's a great time to look at investing into precious metals. If gold or silver drop a little bit, it's a great time to load up. So gold, silver, copper, uranium, a must invest. So they're basically things that are not man-made, and they're the ones that will keep going up due to money printing because of fears of inflation ahead. So another theme I'd just like to finish on was even featured on Today Tonight last Friday, and we all know that Today Tonight's a very credible place. They talked about a story called Camping in Style. More Aussies deciding to stay at home and take their kids and see the great outdoors and travel around Australia. Plus, we've found a way to invest in that, and I'd like to show you that at some stage, so you need to contact us. But soon 4.1 million Aussies will retire. They're called the grey nomads, and they'll want to see our great country. They'll be jumping in cars, caravans or camper homes, and this will create a huge boom in the leisure market and in the tourist park investments, which we've found a ripper. So in conclusion, the US is printing money. It doesn't care about the rest of the world. It's driving down its dollar. It's inflating assets. But in the meantime, it's a great chance to make some money. Understanding these cycles is really important. Commodity cycles can last 30 years. We're about 10 years into the cycle. Over the last 30 years, gold was the worst investment. Over the last 5, it's been the best. So what's it teach us? Investing is all about timing. It's about actively moving from one area to another, which is what we hope to do with all our clients' portfolio. It's really important to contact us. It's really important to reallocate your portfolio to assets that will grow, both super and your personal investments. And this is an ideal time to do it as the year is about to close. Don't put it off to the next year. It's a great time to get started now. If you find this video of any interest or you'd like to know more, there are a couple of things I'd like you to do. You can click to subscribe to the Vantage Advisory YouTube channel. You'll receive these monthly emails for free. If you have any questions, you can do that at the bottom and we'll answer them for free, even if you're not a client. And the last thing I hope you might do is send it to a friend. Here's a quote and a thought for today. A conservative approach to investing needn't mean acting like a sheep and doing what everyone else is doing. I hope you listen to this information. I hope you'll come and contact us. And I think you'll find some great ways to make money over the next 6 or 12 months. Look forward to hearing from you next month.